Hello all, Tony here. US equity markets rose on Friday, propelled by a strong performance in tech stocks following a week dominated by mostly positive earnings reports and the US China trade truce. With the US government shutdown set to extend this week, likely putting JOLTS job openings and non farm payrolls on hold, the focus will be on the ADP employment report and the employment component within the ISM PMIs to assess the health of the US labor market. Let's take a look at the charts of the Nasdaq and S&P to see where they are as we start this new week. Okay, starting with the Nasdaq chart, we can see here again, just a quick refresh. We're looking at this through an Elliott wave framework. We can see that we've got potentially a 5-wave rally coming from off the April lows. Here's your wave 1, your wave 2. This is the correction for wave 4 after an impulsive wave 3 rally. And then we're seeing this move up from the September lows as an extending wave 5. Now, after the wave 5 terminates, we're looking for a pullback. But at this point in time, we don't have any signs that the wave 5 has run its course. In fact, it looks like it's extending. So where would we start to see signs that the wave 5 is complete and that potentially we are looking at a deeper pullback? Well, initially it would be below this uptrend support coming from the April lows, which comes in around 25,000. And that's reinforced by some highs we've seen in the NASDAQ through this period here in early October, then through the middle of October. Now, if we were to see that the NASDAQ break below these levels, then potentially we're looking for a pullback towards at least 24,000, which is horizontal support. And if it was to break below that level, then we are looking at a pullback towards 23,000. Now, that, of course, is presuming we see the first break of this support level here. While the NASDAQ remains above this support here around 25,000, we have to allow this uptrend to continue, potentially up towards 27,000. Looking at the S&P 500, a similar story. We can see within our Elliott wave framework, we can see the wave 1, wave 2. This is your impulsive wave 3, the correction for wave 4 into the September lows, and now we're seeing the wave 5 extend. Well, in terms of how far the wave 5 can extend, there is potentially a target up here around 7,000. And while the S&P holds above the lows we saw last week, coming in around 6,800, being reinforced by this 67, 64 high, then you need to allow for the uptrend to continue. But if we were to start breaking below this 67, 64 high, then below this uptrend support coming in around 6,700, it's starting to look like we're seeing a deeper pullback and potentially we've struck a medium-term high. But once again, we need to allow the uptrend to continue while we're above these key supports. And again, those key supports, this high over here, you've got your uptrend support coming in around 6,700, and then you've got a layer of horizontal support coming in around 6,550. That's all for this week. Stay tuned for more updates ahead.